Stick with me because in this video, I'm going to show you how exactly to avoid this trap and how to get those savings working for you. Right now, everyone's talking about interest rate cuts. Australia's big four banks, the CommBank, Westpac, NAB and ANZ are all predicting the Reserve Bank could start dropping rates as early as next month. CBA and Westpac are forecasting 4 rate cuts that could bring the cash rate down to 3.35% by the end of 2025. NAB thinks it could go even lower and ANZ is probably a bit more conservative. First, let's look at what a rate cut could mean for you. Let's say you have a $500,000 mortgage. A 0.25% rate cut could mean you'd save $74 each month or $888 a year. And while this sounds like great news for home buyers, there is a catch. The banks don't actually have to pass on those rate cuts to you. So if the bank only passes on a 0.15% of a rate cut, your savings drops to only $44 a month. And over the life of your loan, this reduced savings could add thousands of extra dollars of interest on your loan that comes from your pocket and not the bank's. And it's reasonable to think, surely the bank's going to pass on the rate cut, right? Well, history tells us that's not always the case. Did you know that in 2019 to 2020, the Reserve Bank slashed the rates by 1.4%, but the banks didn't pass on all of that to their borrowers? CBA cut by 0.82%, Westpac cut by 0.8%, NAB by 0.84%, and ANZ did slightly better at 0.97%. This means that Aussie homeowners could have missed out on up to 0.6 worth of potential savings. Instead of that money going into your back pocket, it stayed all with the banks. And these historic figures don't say ANZ is going to be the bank that's going to pass on the most because it depends on their standard variable rates at the time, the discounts that you have. But the big question right now is, will they pass on the full amount of rate cuts we might see this year? In my opinion, they'd be mad not to. CBA just posted a huge profit for the first quarter of this financial year with $2.5 billion. NAB, Westpac and ANZ have all posted slight decreases in their most recent results, but they're still making billions of dollars. And yet in the meantime, as of August last year, 2024, more than 2 in 5 home buyers reported struggling to pay for their home loans. That means up to 1.4 million Australians are facing mortgage distress. This is the highest level since they began tracking in 2019. Now, it's not to say the property market is going to completely drop or something catastrophic is going to happen. It's just more and more people are feeling the pinch with the cost of living crisis going through right now. I'd be surprised if the major banks didn't pass on the first full rate cut when it does happen. And if they don't, it could be time to find a new lender. But before we get to that, let's take a look at what you can do to get your home loan rates down. As the rates start to come down, your default minimum mortgage repayment will also reduce.